Hey everyone, recently I passed a 50k funded account challenge with Apex Funded Trading in just 1 week, using my structured one-to-one trading blueprint. In this video, I'll show you exactly how I do it, how to trade with structure, avoid overtrading, and stack small profits that actually compound. Alright, so we're going to start our one-to-one trading blueprint by first identifying the kill zone that we're in. You can see I've written up the blueprint on the top right here, and we're going to go through each one with a real life example so you guys can get the best feel for how this operates. Now each day we want to stick to one or two of these kill zones. We have Asia, London, New York AM, and New York PM. It's important to note that the times that I have on screen here might vary slightly depending on what source you're looking at, but typically these are what I like to stick to and what majority of people who trade ICT like to stick to as well. Now when I go through these examples, I'll be looking back at the London kill zone and the New York PM kill zone, as that's what I was trading when I passed that funded account challenge. But the concept of this one-to-one trading blueprint will work in any kill zone, so just do what's best for you. So if I go over to the most recent PM session, we can go back in replay mode and look at when the PM session starts and try and build a trade idea using this trading blueprint. So for me, I'm going to start tape reading the PM session at 2 PM. Now, as I said before, the PM session does start at 1 PM, but I always prefer to start looking for a trade from 2 PM onwards, which is why I'm looking at it here now. Now, we're simply going to start by looking for a key target. Keep in mind that key targets in trading are built around liquidity. Most importantly, equal highs and equal lows. Then higher time frame levels like monthly, weekly, daily, and session highs and lows. Knowing this, the two main pools of liquidity that I'd be looking at right now are the monthly low and lunch session high. But remember, when you're marking out liquidity, you also need to take into consideration what's happened throughout the day. So if you look at from New York Open, we've had one of the largest down days this year. So leading into this session, it would likely be more beneficial for us to look for a continuation lower rather than trying to fight the trend and look for some buy side delivery. So even though we're following this blueprint to a T, you still want to be using some general market structure knowledge to understand that looking for longs in this situation probably isn't going to be the right idea. If we're using that as our bias, we're likely going to be looking for a draw towards this monthly low. But we can't just enter a trade, we have to build a framework. If so far we've identified the kill zone that we're trading in, we've identified our key targets, the next steps are to look for a macro window. Now a macro is simply a 20-minute trading range. There's going to be the last 10 minutes of each hour plus the first 10 minutes of each hour, making up that 20-minute window. Now I have an indicator for this which I'll put in the description. It's simply a macro tracker, so instead of marking it out manually, you can just use this indicator to mark it out automatically, and this is what we're going to be watching out for. So when a macro starts, the indicator will start and it will mark out that entire macro window. And me personally, I like to trade in the 1 minute chart, which is what we're on right now. But we can't simply just look at that alone. We need to have some sort of higher time frame PD array or a higher time frame stop raid to enable us to build framework on the 1 minute chart. The lowest higher time frame chart I'll be looking at is the 5 minute chart. But I also like to look at the 15 minute and the hourly chart, depending on where we are in the daily range. So if we're wanting to mark out any higher time frame PD array, all I can really notice is that we have a 15-minute fair value gap here, but we also have this inversion fair value gap within this larger 15-minute CB. So I'm going to mark out this 15-minute inversion fair value gap, keep that on my chart. I'm then going to go down to the 5 minute, and we can also see that the 5 minute, we've got multiple bearish fair value gaps in a row. So what I'm going to do is take my fib tool and mark out the optimal trade entry. And if we're looking for a trade down to the monthly low, I want to see us potentially reach the midpoint of this range and then reject from there down towards the monthly low. So I'm going to also mark out any PD array which comes in close proximity to this 50% level. And the first and closest bearish CB is this one here. So we're going to keep these two in mind and see if we can get a pullback into any of these before running lower, because we don't want to be chasing price. We want to build framework that gives us a good entry on the 1 minute chart. We can see we're in this 150 to 210 macro at the moment. We're not looking for a trade here because we're just reaching lower at this moment. So with that done, we're going to quickly skip to the next macro window and then judge what's happened here. So at the moment, we've built this internal high on the 1 minute, and we also have these equal lows here on the 1 minute as well. So this is a great sign because not only are we targeting the previous monthly low, but we also have some equal lows that are being built here, which are another great pool of liquidity to target. So we're in this 250 to 310 macro at the moment. You can see we've traded up above this internal high into our high time frame PD array. When this happens, we can also identify if there is SMT between NQ and ES. We don't need SMT, which is why I've labeled it as optional. But when it's there, just know that you can be much more confident in your trade playing out. And if you don't know what SMT is, I'll link a video on screen now where I go through the details of what SMT is and how to use it. Now, what are we doing in this situation here? We're sweeping an internal high. Our draw is still lower. We've reached this 5-minute SIBI. So next, what are we looking for? We're looking for a change in the state of delivery. Now, closing below here would mean that we have a change in state of delivery, and we can look for our entry, which is in a fair value gap or an inversion fair value gap. Now, at this current point in time, you want to be looking through your trading plan and making sure that you're ticking off all the criteria. We're in our PM kill zone. We have a key target being these equal lows, monthly low. We're within a macro window. We've reached a higher time frame PD array, SMT optional. We have had a change in state of delivery, and we need a fair value gap or an inversion fair value gap for our entry, which we get right here. So that gives us a perfect spot to go short. So we're going to put a sell limit here, and we're going to put a 1-to-1 risk to reward ratio. And for me, I'm going to try and cover both of these fair value gaps. So that would be roughly a 60-point stop. So we're going to wait to see if we get an entry. And then we're also going to place our TP, which 60 points is just above these equal lows, which is great because even if we were to get another run down and fake out these equal lows, we could still have a winning trade. So we get ticked in there at 304, still in the macro window. We're going to move our stop there and then around there as well, around the equal lows. And we're going to see if it plays out. Now, when this is happening, some of you might not be comfortable with holding trades into retracements. You might see us start to leave a PD array like this and move your stop to break even instantly. You want to try and avoid that when you're following this method. And you just want to let the trade play out, whether it's a win or a loss, and just be happy that you are following the trading blueprint here. Because you often find you'll move your stop to break even way too early, and then all of a sudden price does run in your direction and it would have been a winning trade that you've now missed out on. So we see here we get very close. We get a retracement again, which would have stopped you out if you had put your stop break even. But we're still holding this regardless of the outcome. And there you go. There's your winning trade there. You sweep the equal lows and you're done for the day. Not even caring that we have this monthly low as a key target down here. You've had the setup. You've had it play out in your favor. You can walk away with a win. But you want to learn from these trades that you've experienced. So if you were holding more than one contract like I was there, you could potentially build your understanding of market movement and then be comfortable taking off one contract here and then holding to an external liquidity level, like the monthly low that we have here. Because in fact, we do then continue and drop and take out the monthly low. And even if you were to get out early, like we did here with our 1-to-1 blueprint, you can't be upset that you missed this portion of the trade, because this trading blueprint is built to help you build your account with consistency. And that's exactly what we have here. We want small wins, but big consistency. And you'll see a vast improvement in your trading over time when you're following a rigid trading plan like this. All right, now I'll go over another couple examples. So we'll move all our drawings here and we'll just move back to any day. We can even just go the day before, so Wednesday. And I'll look for something in maybe the London session. If you're doing backtesting like this, what you want to do is you want to try and look for sessions which have things like fair value gaps and easy liquidity pools that you can spot. So you can see Wednesday's London session here, which is 2 a.m. to 5 a.m. That's the kill zone. We can see that on the 5-minute leading into London, we have this 5-minute BISI here. We have a key level here, which is Asia session's high. And you can see that throughout the Asia session, we've swept a bunch of sell side liquidity here, but how can we use this information to then enter a trade with our trading blueprint leading into London Open? All right, so we've noted this. We've got this 5-minute SIBI that'll form on the 1 minute. Now, what are we going to do here? We're going to wait first for a macro. So we're in a kill zone. We've marked out our key targets. Our key target being Asia's high for today. Now we need to look for our macro window to start. So we've just had the 150 to 210 macro, and we've seen displacement higher and a 5-minute fair value gap be created. Now that macro window is passed, so we're going to move straight to the next. And there we go, it starts here. So we've got the 250 to 310 macro. We're going to wait to see if we reach a high time frame PD array, if we have a change in state of delivery and a fair value gap or inversion fair value gap to enter on. We've reached nothing yet, we chopped around. Okay, and the macro window finishes. So at 310, and we're just reaching down into this high time frame PD array now. So what are we going to do? Nothing. We're literally just going to wait until the next macro window to see if we can get another opportunity to enter. And you'll have times like this where a macro window will end and you'll get a dip, say, into this high time frame PD array. You'll get a fair value gap and it will trade through and towards the high. But we're going to follow these rules 100% of the time. So if that was to happen, we're not going to take the trade and we're going to be happy with it because overall we're just wanting to follow this plan and nothing else. So we can still move to the next macro window because we're still in the London session kill zone. And look at that. Reaching the next macro window, we're still yet to sweep Asia's high. And we've just put in equal highs now. So that puts even greater emphasis on this as our drawn liquidity. But we're in the macro window now. So let's see if we can get the last few steps of our entry model to play out to enter in a trade. We've reached the 5-minute BISI again. And in doing so, we've also swept this low here. So we've had a stop trade while also entering a higher time frame PD array. That's great. So now can we get a change in the state of delivery and then a fair value gap or inversion fair value gap to enter on? A change in state of delivery would be when we reach and close above the most recent swing high that put in the most recent swing low, which is this here. And you see us now close the next candle and we've got a fair value gap, which is also overlapping with this inversion fair value gap. When you've got two PD arrays overlapping like this, we're just going to trade at the highest entry point. So for us, it'd be when we come back into the top of this BISI here. Now, if we're entering here and we're wanting a 1-to-1, I think something like a 20 to 15 point stop is probably ideal. 20 would give you room to trade back below this first candle that put in the BISI, which would be great. And then 20 points would be not even reaching above this next swing high. And if our target is all the way up here, getting this move just up to here with 20 points would seem relatively easy to do. So we're going to put in a limit here and see if we get entered. We do, we get entered there. We're going to put a 20-point stop, which is there, and then our take profit also at 20 points. And wait to see if we get, and there you go, the trade plays out. And this is another situation where you can see we're moving higher. You might be upset that you could have held to these Asia highs and equal highs, but that's not the game plan. It's just a trading blueprint, 1-to-1, stick to it. You'll be consistent with the small wins and it'll pay off. But you see, we do eventually run it there. So you see, we took our profits here at 20 points. And then if you were holding even higher, you would have had to sit through, another half an hour of price action before we reached that. And some people aren't mentally capable of doing that, which is why this trading blueprint also works so well, because you're usually in and out of a trade within a couple minutes. It's just a one and done, you're done for the session or done for the day. All right, now we'll look for another random example and see if we can get something to play out in our favor once again. So when backtesting, we're going to want to look for a session where you can see an easy buy side level or an easy sell side level and some inefficiencies to use as well for price, as that's what you're going to want to see in your real day-to-day trading as well. Okay, this might work here, which is, I think, the day before the one we just reviewed as well. London session. Let's look back to the 2 a.m. open here. On the 5-minute, we can mark out this high and we have this, which is Asia's low. Now in here, we have these two bearish fair value gaps on the 5 minute. Now I'm going to mark out both as 1 because there's not really a wick on this second fair value gap, just a volume imbalance. So often when that happens, I just sort of mark them out as 1 and see what happens when we get a reaction around the 50% level. We'll go down to the 1 minute, and then we're going to start checking off our trading key plan once again. So we're in a kill zone. We're in the London kill zone. We have marked out key targets. We have one higher time frame PD array here. We'll actually look quickly on the 15 minute. So we can probably narrow this down to this 15 minute fair value gap instead. And now we're going to be looking for the entry model within our macro. So we're changing state of delivery and a fair value gap or inversion fair value gap, 1-to-1 risk to reward. So in the macro, we're going to sweep of Asia's low here. Just checking the 5 minute, making sure we're not creating any inefficiencies. Now we have 1 minute here, this 1 minute BISI, and we're looking towards the next macro window to then look for our entry. So this might happen at times where we literally just get, after the macro window, we get a straight run in one of the directions towards our key level, and that's fine. We're not in a macro window, so we're not looking for our trade because we're following our rules. Now, next macro window starts. We have inverse at 15 minute SIBI, and it's now a 15 minute inversion fair value gap. We'll look on the 5 minute. See, we've got a BISI down here. We've got a BISI there. We're inversing. So still nothing really to go off of yet. Let's see what happens on the 1 minute here. We've reached this 15 minute inversion fair value gap. This here is our change in state of delivery. We're creating a BISI here, and we're going to look for a 1-to-1 risk to reward. So something like a 20-point stop would be ideal. A 20-point stop would cover that fair value gap and then trade just up here short of our main target, which is always good because you don't need it to reach your extreme liquidity level. All right, so we'll put our buy limit there. We'll see if we get tagged. Almost. And we don't get tagged and it runs at buy side. And that'll happen sometimes. The idea was there. It didn't play out. And sometimes if you're trading maybe on a micro chart, you might have got that tick into this BISI here and it would have been a winning trade. But that's just an example of it playing out, but you're missing your entry, and that's going to happen. And you're going to be okay with that because there's always going to be opportunity in these markets. And by following this trading blueprint step by step every day, I guarantee that even with a simple chart outline like this, you'll be able to become profitable and build your account slowly. And that's the goal. Our edge in the market here is following this trading plan. So be confident in yourself and don't worry too much about the outcome of the trade. A win's a win, a loss is a loss. If you follow a process like this and trust in your ability to read price action, then you will come out on top. Have this in the back of your mind. The biggest shift in your trading journey won't be technical, it will be mental. Once you stop trying to force big wins and start following structure, trading will become boring, but in the best way possible. Every day will look the same, every trade has the same parameters, and that's what creates consistency, and that's what we're trying to do with this trading blueprint. I believe in you, it's time for you to believe in yourself. Now that's it for today. So if you use this blueprint to take a trade in the future, I'd love if you came back to this YouTube video and let me know how you're going in the comments. Or I have a free Discord, which I'll link in the description. So if you want to ask me any questions or just have a community of traders to talk to, I'll have a link below. And don't forget to like the video if you found it helpful and subscribe for more content and live trading. I'll see you in the next one.